Welcome to today's presentation. This is Titan Tech. We're going to be going over a brief introduction on just our company and just the experience that we had through today's simulation. So just to get things started, the company was founded with the aim to provide a reliable, powerful, and innovative microcomputer that seamlessly integrated with customers' daily routines year after year. So what we did was we analyzed the industry to determine the most effective way to build our market presence, and we ended up serving a broad range of customers with differentiated products tailored towards evolving customer preferences. We prioritized specific customer segments that we knew would yield high value returns, specifically the workhorse, innovator, and traveler segments. So today we're just going to go over an analysis for both the industry and the company. Then we're going to cover the team's current strategy, and then after that, we're just going to look over our performance, review the highlights and outcomes, and then we'll end things off with the proposed strategy and the quarter nine and the next 4 quarters after that.
Thanks, Carl. I'm going to start by looking at a external analysis of this microcomputer industry. And to start, let's examine the economic characteristics. Now, for starters, we see that in every quarter except one, there was 100% growth of revenue quarter over quarter, and the average growth percent was 119%. Gross profit also grew as revenue grew to keep the firm profitable as sales increased. While net income started in the negative for the first several quarters, we see that in the last 3 quarters, it became positive and then grew exponentially from there. And then production averaged an 110% increase of units produced quarter over quarter. Now, looking at the five forces analysis, we rank the threat of new entrants as moderately high because of their access to capital, there are limited regulations, and there's an easy and fast production development schedule. Looking at the bargaining power of suppliers, we rank that as moderately high because there are a limited number of suppliers and the firms need their products to complete the finished goods. The bargaining power of buyers we rank as moderate because while there's competition for their business, these buyers really bring limited buying power to the table. The threat of substitutes we also rank as moderate because while there is a growth of new technology like phones and computers, phones and TVs, there are still some things that computers do best, and we see that applied in the business setting most clearly. And then the competitive rivalry we would rank as high because there's equal funding across the board, there are limited customer segments to compete over, and there's a short duration of the simulation, leading many companies to be a bit more aggressive. Now, finally, let's look at some threats and opportunities in this industry. A few threats that come to mind would be the fact that there is intense rivalry, and also there is a significant threat of new entrants. Both of these together can cause firms in the industry to be pushed out in lieu of new firms entering and dominating the industry. But there's good news. There are opportunities. We see the ability to improve brand judgment and brand loyalty as a strong opportunity. We see that in that you can differentiate your product and truly stand out from others. And then finally, we see there's intense growth of revenue, of profitability, and truly it's a great place to be in this industry if you are interested.
Thank you, Elliot. So now I'll be providing an overview analysis of the company itself, starting with HR resources. Titan Tech was awarded the most productive sales staff in the industry. In regions like NORAM, Latin America, and Europe, our productivity rates are exceptionally high, and that's largely driven by the competitive compensation packages that attracted and retained our top talent in the industry. Even in MEA and APAC, where we offer slightly lower salaries, our sales team still performed strongly, even though it wasn't the best in the industry. Additionally, our production workers were also awarded the most efficient in the industry, thanks to our commitment to lean operations and continuous improvement. Moving to physical resources, we lead the industry with the highest number of sales offices, with 11 globally. These offices are strategically located across all major markets, ensuring we can effectively serve our customers responsively. Our lean-based production system also allows us to adapt quickly to market changes and minimize excess capacity, making our operations both agile and cost-efficient. Moving on to organizational resources, Titan Tech is recognized as the most reliable company in the industry with a top ranking of 85. This reputation for reliability sets us apart, especially in markets like Latin America, APAC, where customers prioritize durability. We've also heavily invested in marketing research, which allowed us to tailor our brand positioning to each region, emphasizing that innovation in some markets and rugged reliability in others. So, lastly, when we look at our value chain and sustainability, what stands out is how we've turned our capabilities into our core competencies as a company. Our investments in talent, infrastructure, and research have all been strategic and interconnected. However, we're also aware of our vulnerabilities. Other firms could potentially match our compensation or expand their physical presence, and the shifts in consumer preferences could challenge our current positioning. So, while we're in a strong position today, ongoing adaptation will uh, be key to us maintaining our edge in the industry. So, in summary, Titan Tech's competitive advantage lies in our highly productive team, strong global presence, reliable brand, and market driven strategy, all of which are currently supported by an efficient and sustainable value chain.
Thank you, Alexis. So for our current strategy analysis, Titan Tech followed more of a broad differentiation strategy, targeting workhorse, innovator, and later the traveler segments. So we intended to maximize our margins through high quality differentiated products, and we soon realized that that strategy was partially misaligned with the workhorse and traveler segments, specifically due to their price sensitivity. So also in addition to that, our pricing flexibility was able to help us maintain competitiveness despite that margin focused intent. And also our operational efficiency also allowed our strategy to succeed even in those price sensitive segments. So to answer the question if that strategy is appropriate for the industry, it is a astounding yes. However, the broad differentiation strategy is effective in this industry. It has to be aligned with premium segments. So specifically, Mercedes and Innovator, those segments have to be the primary focus of a firm in this industry trying to utilize a broad differentiation strategy.
All right, now we'll take a brief look at our company's performance. Overall, we saw a strong positive trend with Titan Tech's revenue, the slope of this linear trend being a positive 6 million. With our gross and net profit per quarter, this improved significantly over time as well, specifically our net income from slightly over 1 million to 10 million in the seventh and eighth quarter. And looking at how we perform financially against our competitors, we were able to create relatively large profit and wealth increases for our investors over time. In these areas, we somewhat kept pace with Apex while pulling well away from Nexora and First Choice. All these trends are consistent with our decisions and efforts down the stretch, where we started to significantly increase investments in our sales force, office locations, ad placements, and production capacity. On to our financial ratios on the next slide. Our current ratio was not able to be computed in the most recent quarter because we did not carry any debt. To go along with this, our debt to asset ratio was 0 in the most recent quarter and 0.03 in the trailing 12 months, meaning we took on very little debt to finance our assets. Here we stacked up well against the industry as the most recent quarter had an average ratio of 24.57. We did take out a small emergency loan in the seventh quarter, but outside of that, we're able to manage our finances well. So we never had to take out any massive loans like the other companies did. We performed relatively well with the inventory turnover ratio in the most recent quarter with a 9.07, but higher than the industry average in the trailing 12 months, which was 16.8, while ours was 20.63. Higher numbers indicate low inventory and stockout problems, which we did face in the fifth and sixth quarter, so this makes sense. Our gross profit margin ratio was the lowest in the most recent quarter and trailing 12 months. The gross profit margin ratio considers cost of goods sold, meaning we had higher costs of goods sold in relation to sales. Conversely, our net profit margin ratios were the highest in the most recent quarter with a 54.71 and one of the highest in the trailing 12 months. This converse relationship indicates that while some of our competitors had low cost of goods sold, hence why we had one of the worst gross profit margin ratios, they had performed worse than us in net profit because they had potentially sold low amounts of goods, took out loans, and had other high expenses. So that'll take us to our proposed strategy.
Thank you, Alex. So I'll be walking through Titan Tech's proposed strategy moving forward. Our proposed strategy tackles change on both the business and tactical levels. At the business level, we're shifting to a more aggressive market posture, doubling down on our core workhorse segment, while also revitalizing our presence in the innovator and traveler segments. We're leaning into what we already do best, delivering high quality, reliable products with strong value and making sure the market sees and feels that. At the tactical level, we're aligning every function to support this strategic push. So in HR, we're reinforcing what is already working, our high productivity and engagement. To sustain that, we're expanding training, especially in sales and production, and continuing to offer competitive compensation to attract and retain top talent. In operations, we're directly addressing stockouts. That means improving changeovers for more flexible production and enhancing demand forecasting with predictive analytics. This will help us match output more closely with real market demand and reduce missed sales opportunities. In regard to R&D, we're launching new brands like Titan Flex 2 and Titan Edge Ultra, tailored to our core segments, while also investing in innovations that reduce downtime and enhance product quality, boosting both efficiency and appeal. And in marketing, we're shifting toward stronger brand development and smarter data-driven campaigns. The goal is to improve brand judgment and ad scores while building real customer loyalty through better post-sale support and engagement. In short, this strategy takes our internal strengths and turns them outward, transforming efficiency into market growth and stability into long-term shareholder value. So just to conclude, all of these changes to our functional and competitive strategy will leave Titan Tech well positioned for future achievements and future success. So thank you on behalf of Titan Tech.